Anyone in stocks? You guys are not trading any of these stocks?
Hey, Dave, I am. I'm in GLT.
Hey, Leon, GLT?
Hello. Yes.
Hello. GLT. You know what sector that's in, Leon? Hey, Leon, can you hear me?
Oh, sorry about that, Dave. It's in industrial.
Industrial? How did
Yes.
you find this stock?
I go to FinViz and use their screener. And I look, industrial materials are the top sectors right now. So I chose them stocks to get in, and they're trending. They're starting to trend big time.
Leon, how long have you been with us?
Like almost 2 years, I think.
Yeah. Yeah, Leon doesn't come on here that much. But I love it when our traders really start to figure things out. So he's absolutely right. If you look at right here, materials, that's the top materials, industrial, they're the top sectors right now. But look at this stock here he got. Look at this stock. And I want you guys to take a picture of this stock here. This is an amazing trade here. Leon, good job, bud. Good job.
Oh, thanks, Dave.
Wow. Look at this. What an amazing trade. All right.
It's just about to take off, too.
It's just about to take off. That's for sure.
Yeah.
What a clean trade. What a clean trade. I'm going to make a note of this. GLT. All right. You guys should take a picture of this trade. All right. This is when you find the, and I'll walk you guys through this trade. All right. Wow. Okay. Buyers came in here, broke resistance. Resistance became support. Price failed, went up, came back down. Resistance becomes support, failed, got out. This is why we use the systems. All right? This is why we follow the trends. This is why we use the systems. And this is why we keep our minds right? Trading in the zone. Price tested resistance again up here, broke resistance. We got a buy signal, right? Here is support right here, failed, got out. Look what happened afterwards. Look at this markdown phase. What a beautiful markdown phase. I don't think we can get any more perfect than that. Nice selling, right? No buying ever really came in. We have a small little white candle right here. All red, right? Price fell from $18 all the way down here, all right? Here is our consolidation. So markdown phase, markdown phase, markdown phase, right? Leon waited, accumulation, broke resistance, right? Broke resistance right here. You got a buy signal right here. Nothing here to block his trade, right? No consolidation. It's a nice, smooth markdown phase. No buying and selling. No consolidation. Very smooth. All right. Perfect buy signal on a break here. right? Buyers are holding, buyers are holding, buyers are holding, right? And now they're moving higher. Leon, what's your price here? What's your entry price?
Hold on, I got to pull it up.
Okay.
I just got in today though. Let me see.
Perfect. Perfect.
Let's see if I can pull it up.
Perfect. What a great trade.
I got in at $3.96.
So 396. All right, guys, it dropped at $18. And we'll take a look at the monthly to see, monthly or weekly to see his potential on this trade. All right, but 396. And look at his protection. So a lot of times we don't think about this, right? We just want to get in, right? But we also have to play defense, right? So his offense is great, right? Waited, right? It went through that, its markdown phase. All that selling has been exhausted, right? All that selling here has been exhausted. Waited for the buyers to come in, nailed the buy signal. Leon nailed the buy signal. But guess what? Here is his protection.
Now, Dave,
Sorry, Dave, where was that protection?
What's that?
No, I missed that. I said, where was the protection you said?
Yeah, I'm bringing it in now.
Oh, sorry. I'm sorry, Leon.
Yeah, that's fine.
Now, Dave, I'm looking at this chart. This chart been running for some months, like almost 4 or 5 months on the downtrend. Now, you wouldn't do the same thing in the Forex market like you would this market, right? It won't be possible to ride it out that long, or would it?
Oh yeah, yeah, of course, yeah.
With months on at a time.
Oh yeah. No, we haven't seen that type of trends recently, right?
Right.
I would say in the last, perhaps in the last 3 years or so. You know, that's a long time.
So it's not normal like the stock market to see it like that, right?
Well, why did this happen, right? We had a pretty deep correction in equities.
Right.
Yeah. So that's why. So if we have some deep moves in Forex, yes. The only reason why we having a lot of choppiness in Forex is because we haven't had any big blowout moves in Forex. All right. So, but it does happen. It will happen. All right. Yeah. But it hasn't happened. You're right. It hasn't happened in Forex for a while, but and that's, you know, and as Forex traders, you know, we've suffered a bit because we haven't seen some really big trends. Okay. But if we can trade this environment with Forex, some choppiness in Forex, guess what? When we get this, just like you're doing here, Leon, it'll be easy, right? Right. So here is your protection here. So resistance right here, right? Resistance right here now becomes support. So look at his downside risk. Look at his downside risk. And I know a lot of times we look at the potential, right? So his potential is $18. He bought it at $3.90, right? He really could get to $18, all right? Even if he got to halfway there, right? So you've got some, you know, you've got some pretty good support resistance right here, all right? You should be able to get through this area here, all right? But you might have a concern in this area here. All right. But that's still from $3.90 to $12. That's pretty good. All right. That's his offense. That's his potential. Right. But his defense, and defense is always first. Right. Look at his defense. resistance becomes support right here. If it fails, guess what? Resistance becomes support. He'll get a sell signal by the system right around here. So he's got a very tight. You guys see that? And no emotion. So if the system gives a sell signal just like it did here to get out, right? We get out. All right. And his loss, let's say right above here, right? Should be about 280 or so, right? 280, 290. All right. Right here. So he's lost 1 point. Right. So he's lost 1 point. $1 he's risking to get 12 or 18. Big difference. Big difference. Great trade. Leon, this is a great trade. Great trade. Good job. Great trade. What else does he have? What else does he have?
Dave.
Mm-hmm. Yeah, you're welcome. And he's worked at this, right? He's worked at this. What else does he have in his favor? What else does he have in his favor? So he nailed, right? He nailed the entry there. Right? He nailed the entry, right? He waited for all the sellers, right? All the selling to be done. What else? What else did he do? What else did he do? And he mentioned it. What else did he do? The sectors, right? He's got the sector in his favor, right? So industrial, right? Industrial sector, material sector right here. So they're moving higher, right? Here is materials right here. Buy signal here. Look here, it's breaking resistance right here. Look at the resistance right here. Right, buyers are coming in. It's breaking resistance right here. Right, breaking resistance. Look at this. Really nice, right? All right, and industrial, they go hand in hand, right? Industrial, look at that, right? Same thing here. Look here. This is the type of work we need to do so that we get really good results, right? We don't just jump in and start buying, right? And look here, this is pretty cool here, right? And he also has the market on his side, right? So he's got the Christmas rally, he's got the Dow is moving higher, right? But look here. Look here. This is where sellers, this is a tough area here. Look at that. All that consolidation in here. All right. This is where buyers failed before here. This is where sellers came in before. And guess what? He's right here. If he can get past, this is on the sector now. This is on the sector now. All right. We got support down here. All right. So look at this. If buyers take over, guess what? Could really make a move, and that will help his stock. All right. His GLT stock. All right. So he looked at the sector, right? The market is on his side, and then his stock right here. All right. So, and it's good to see. David? It's good to see, 1 second, Arthur. It's good to see you guys are doing this. It's really nice to see that you guys you're paying attention, right? You're not just buying stocks, right? You paying attention to everything, and then you nailing your entries, right? You nailing your entries. So good job. Yes, Arthur, go ahead, please.
No, sorry, it was me. So what sector
Oh,
is it?
Ranjit. Okay, Ranjit. Sorry. Okay, go ahead.
I'm sorry. What sector is this? What is the name of the sector?
The sector. I think it was industrial. Leon, it's industrials, right? Or materials. Which one is it?
I think that one was industrial.
So David, like two questions here. Like this chart is a daily chart, right? So
yes.
Should we also take a look of weekly and monthly?
Yeah, let's do that.
Yes. And another question is that what really creates that buy signal? Is that just the breaking the resistance? Means it can further go down also, right? So like what does that, why you're saying is that a perfect buying opportunity over there?
Okay. All right. So a couple of things, monthly, weekly. Okay. All right. There was someone, it was Dean. I think it was Dean. So Dean had been doing Dean came on board, and I love when traders do this, right? A lot of our traders will do this. Alex, I spoke with Alex the other day. He doesn't come on here much anymore, but I spoke with him, and he's really doing well with his trading. And he did a lot of back testing on the systems, right? When he first started trading with us, right? Our analytical traders, we have a lot of analytical traders that will do this, that they will basically take everything apart. All right. So Dean had mentioned that he looked at some other tools alongside the trading, what we are doing here. And this was in class. And he noticed that on his tool that there was a lot more buying entries, right? Entries.
Yeah. Yes.
Right? Correct, Dean?
Correct.
Yeah. Compared to our entries. All right. And this took a lot of work, and it's hard to do. It's really difficult to do. Okay. Because most systems will give you false buy signals. All right. And I'm going to do this here. So, and you guys will get an appreciation for the systems. And the reason I did it this way is so that, and I did it for me because I wanted a very robust system with almost 100% precise entries. Okay. So the system is built in such a way, right? In such a way that we have smooth, we don't listen to the noise. So you guys know we don't pay attention to the news, right? But there's also noise in the price action. All right. And all these movements, these up and down movements here, it's noise in the price action. Okay. So we need to stay in the trend. So I want to show you guys something that's really cool. If you notice, we had a buy signal here that failed, a buy signal here that failed. We never had another buy signal. And this was, and Leon mentioned months, right? This goes back for months, right? And we didn't get another buy signal until here. All right. Those of you who use the trading systems, go through your history, right? And look at the trades. And you will gain a lot of confidence. All right. In your system. All right, let's do this here. Okay, what do we have here? What are these?
Losses.
What are they?
The losses.
No, they're shorts.
The shorts. Yes, I see. The blue means that you're making a profit on a short.
Yeah.
Is that it?
Yeah.
Okay.
So Ranjit, right? Right? This is the markdown phase. Now,
Correct.
now, the systems will follow the same 4 market phases. All right, let me repeat. The systems, all our systems will follow the 4 market phases. And why? Because we know the 4 market phases work, right? We took a look at the Dow earlier, right? Doesn't matter what's being said out there, right? The 4 market phases is the 4 market phases. So the system trades the 4 market phases. The system trades the 4 market phases. It helps you follow the 4 market phases because we know that works. Accumulation, markdown, all right, markup, distribution, reaccumulation, redistribution, it follows the same thing. All right. So we will not get a buy signal here during the markdown phase. Now, if it's choppy, we might get a sell signal. So here is where we went short. We could have shorted here all the way down here, right? Made money here. That's the markdown phase. Got out here, went short again. All right. Got out here. All right. We got out here, buy to cover because buyers are coming here. All right. We would not have gone long here. That's why we didn't get a buy signal here. Now, if we happen to get a buy signal, let's say buyers are coming in, right? And sellers come back in, guess what? We'll get out and let the price action continue through the markdown phase. But we cannot go long here because we're in the markdown phase. We have to wait. All right. And the system will do the same thing. Wait until buyers come in to now enter and get into the markup phase. If it fails, so if Leon's trade fail, right? Sellers come in, break support, he'll get a sell signal here. And then the price, he'll have to wait until the price buyers come back in at some point in the future. All right. But if that happens, he's on to the next. He's not waiting for this. He's on to the next. All right. So the short answer to your question, the reason we got a buy signal here and not here and not here and not here, because all of here, right? All this area in here is the markdown phase. We're not supposed to get a buy signal during the markdown phase. We're only supposed to get a buy signal right here on a break of resistance. Why? Because the buyers are coming in, they're entering the market now. All right. So I brought, and I like to bring out these sell short signals, although we're not shorting. This is a good exercise to keep us out, to allow us to stay away, because guess what? We shouldn't be buying. If anything, we should be shorting. All right. Ranjit, does that help?
Yeah, I think I agree. I'm agreeing with you because that on the markdown phase, I do not see any candle breaking the resistance. So
Nope.
I believe that's what you're saying, right? Yeah.
Yes.
I think I got my point. Yeah.
Yeah, and that can't, there are no buyers, right? There are no buyers. There are no buyers. And the advantage that we have, we can tell from the candles, right? No green candles, no buyers. And that's the beauty of this trade, right? That's what, I mean, Leon did a really good job finding this trade, because guess what? There are no buyers to come in, all right? And it's a very clean markdown phase. You will find it's not exact, it's not guaranteed, but the majority of the time, right, a large percentage of the time, when we have really good markdown phase, we tend to have really clean markup phases. Okay, think of the
Means
think of
I can see the system, like even if like this markdown phase is like it's not a straight line, it's just up and down and up and down, but it's downward trend, right? So I can see the system is really clean, like all red, so it shows as a nice markdown. But if you see on the Zoom side, like it's really like every day or 60 minute is breaking a resistance, but those are the small resistance, right? So
yeah, and these compared to some price action, this is really smooth price action. This is really clean. All right, this is really clean. It's not choppy like here. Here is choppy, right? So whenever we have green candles, white candles, red candles, that's very choppy. That's consolidation. We had no, we had a bit of consult, but no, the sellers have been in control the whole time. All right. And then think of these areas as barriers, roadblocks to your trade. These consolidations are roadblocks to your trade. So he doesn't have any roadblocks. Okay. So from here all the way back up to about 16, 18, there's nothing. And I'm not saying it's just going to shoot up. It might take its time, right? It will take its time. But, right? And there's no guarantee it will get all the way back up here, right? But he's done his job. He's done his job, right? He picked a great trade, right? Perfect buy signal. He got in today, which the buy signal came in today, right? And guess what? He's also playing defense. So if it breaks previous resistance, is now support. It breaks it. Guess what? It's going to give him a sell signal. If it goes down and make another move like this down and goes down to 50 cents, he'll get out here. He'll get out here.
Hey, Dave. Dave, this is Dean. I have a question actually to both you and Leon. So you've indicated it's a great trade. So as time goes by, it looks like it's gonna, go up and to the right. When do you take profit, and how much profit do you take? Do you get out of the trade completely, or do you, I'm going to take 10%, 20%, 50% if it hits 6, or I'm just giving an example.
Okay. All right, we'll end with this. It's 8 o'clock now, so we'll end with this. That's a good question. All right. So keep in mind with equities, they move a bit slower. It's not like Forex. All right. All right. So things move a bit slower. So we need to give the trade time to play out. That's why we trade it on the daily time frame. Okay. All right. So there are two ways you can trade, and with stocks you can do this relatively, I wouldn't say easy, but you can do it. You can do it well. All right. You can scale out or you can scale up. Okay. So make a note. All right. We can scale out or we can scale up. If we scale out, usually, all right, if you scale out, all right, so if we scale out, what you're doing is this. You're putting a larger amount of capital here. So your initial risk is higher. You put in a larger, right? So whatever you would normally trade, you would go larger. So if you have a lot of confidence in the trade, right? If you've been doing it for a while, right? If you got a tight stop, like which he does here, you could go larger, right? So you would go large. Your initial trade would be large, and then you could scale out. All right, so let's go. All right, so your initial position was here. Price moves higher. Let's say it forms another support and resistance, kind of like it did down here, right? We know they don't go in a straight line. All right, so you have new support and resistance here. Price does this. Okay, as the price hits resistance, you can scale out. You can take some profits out of the trade. So you have a, let's say it's 5,000, right? You put $5,000 on the trade, right? You can close 1,000, let's say, as an example, or close a third of the trade. Okay, as it breaks resistance and it keeps going higher, forms new support and resistance again, right? As new buyers come in, breaks resistance, you take another third of the trade. So you're taking profits, right? And you're reducing your risk as the price goes higher. A lot of professional traders will do this. All right. But they're managing a lot of capital. They have a lot of money, right? And so they could put a big position on tight. They have a tight stop here. All right. But as the price, as new buyers are coming in to push their price higher, they're taking profits off the table. They're closing profits. All right. And usually on these trades, you might get 3 swings, right? 1, 2, and then you might do 1 time, right? You might get a chance to take profits up here. So by the time it gets in the markdown phase, by the time it gets in the distribution to turn around, guess what? You've taken profits here, you've taken profits here. And by the time it gets up here, guess what? You're not heavy in the trade. You've taken profits off, the table. Okay, minimizing reducing your risk. That's scaling out.
Scaling out, got it.
Scaling out. But your initial trade, if you have a small trade size, you really can't do this.
Yeah.
All right. You need a big, initial trade to be able to do that and do it well. Right. But the big thing is your defense has to be solid. All right, because you don't want to blow up your account taking a big trade, right? So your stop has to be solid. Your buy, where your resistance and your support has to be very tight, like here. All right. Okay.
Hey David, so how do we know like how many how many markup and accumulation it will take? It looks like it will go till 18, right?
No, I would say to be safe 3 times. You could do so 2 to 3 times max, right? 2 to 3 times max. All right. If let's say for instance you took a big trade here, right? Took a big trade here, right? And then it consolidated here like this, didn't break resistance, broke support, then you would have to close the whole trade here. Okay. But on average, you'll get 2, 3 if you're lucky. All right. 3 if you, this is not normal. This is not normal here. All right. All right. So that's scaling out. Scaling up is using the broker's capital. It's a bit different. And usually small traders, meaning if you have a small capital, small account, right? We do this. We scale up. All right. The nice thing about scaling out is that you're constantly taking profit. It's a really good thing to do because you're constantly taking profit. As the price goes up, you take profit. As the price goes up, you take profit. And psychologically, it really helps us as traders to constantly take profits. It's a good thing. All right. All right. We're not adding on risk. Right. We're not adding on risk. With trading up, scaling up, we add in risk. So our initial position here, all right, so compared to the 5,000, we might do 1,000 here. All right. And then as the price moves higher, right, consolidates a bit, just like the previous trade. When it breaks resistance, we'll add another $1,000 here. So we add in risk to our trade. But we're also taking the broker's money, right? So the profits that we made from here to here, right? The profits that we've made from here to here, we can use those profits, right? And add it here. That's part of our next $1,000. Okay. Now, as the trade goes higher, all right, and let's say it breaks resistance, we can add another $1,000 here. All right. The risk is that as the price goes higher, guess what? If we know that we could get 2 or 3 rounds of buying, as we add in capital, right? As the price is getting higher, guess what? It becomes a lot riskier, right? So we could have, let's say we have 3 lots up here, right? Or $3,000 up here, right? But now we got $3,000 up in this area here where it's risky. We're not buying down here anymore. You see that? Right? Right? So, and every time the price goes higher, guess what? We are adding risk. So as the price, notice that this, as the price, as Leon gets farther and farther from this area here, it becomes riskier and riskier. So there's 2 schools of thought on this.
Amazing, David. This is gold. So like just quick thought. So you are saying take profit in 3, like 1/3, right? So is this the profit or just total profit plus principal, like a principal plus profit, or just the principal and let play with the profit?
Either or. The goal now, okay. So the goal is to do this, is to scale out. So this should be your goal as a trader. Your goal is to get good at this, right? Understand these markets, use the system, trust the process. Most importantly, trust yourself, like what Leon is doing here. Okay, and it's taken him some time, right? He's been with us for a while. A lot of our traders say 2 years. Leon, it's been a lot longer than 2 years. You've been around us a lot longer than 2 years.
Hey, it went fast. Yeah.
It goes fast. I know it goes fast. It goes fast. And then we take breaks. I know we take breaks. We take breaks from trading and all of that, right? But the goal is to get to the point where you can put this is going to be your lowest risk. Put a larger amount, and I know it seems like a high risk because you put in a larger amount, but you're also getting it at the bottom of that markdown phase. All right. Once we start buying up in this area and here and scaling up, right, it becomes a lot riskier, right? What we should be doing, right? We need those retail traders. We're not retail traders anymore, right? We are professional traders. All right. So what we want is this. We want to be here with a core position, and we need those retail traders to come in and buy and push the price higher so that we can get out. Listen, we need retail traders to come in, those traders that don't know any better, right? We have our core positions here. This is what the institutions do, right? They're here. That's the accumulation phase. As the retail investors come in and push the price higher, right? They get out. Right? as they push it higher, they get out. They keep getting out as the price keeps going higher. What we do as retail traders is as the price keeps going higher, we keep buying. We'll buy all the way up here. And we know we've done that, right? No, what we want to do is we need them. We need to have our core position, right? And as the buyers come in, and you're working against yourself, because when the buyers come in to push that price higher, we want to stay in. But no, we really should be taking profits because we know eventually the price is going to do this.
Hey David, just a quick follow-up. Sorry to interrupt you. So when you're saying the core position, is that like we are putting all the money, whatever we want to accumulate for this trade, 100%, or should we buy in some percentage?
No, so whatever your position is. So okay. So we don't teach this a lot because it is advanced. All right, it is advanced. All right. So let's say, for instance, and we have traders that scale up. All right. So the idea is this. But the only way to do it is to have you can't do it with every trade. All right. All right. This is, Leon found a good opportunity here. Nice markdown phase. It's a clean trade, right? The market is performing well. VIX is coming down. Sector is breaking out nicely, right? We're in the Christmas rally. So everything is lining up, right? Right. He's got buyers coming in here. He nailed the buy signal right here. All right. He's got a tight, very tight defense. All right. So if it totally goes against him, right here, he can get out. All right. And the system will give him a sell signal right here. All right. So let's say if Leon wanted to scale up, and a lot of our traders scale up because, you're still learning, right? You can't put you're not going to put $5,000 on a trade like this, or even $1,000. Right? We tell all our traders $200, $300, $400 to start, right? But let's say you've been doing this for a while, right? You've been scaling up. So you've been scaling up. Let's say you're at 1,000. You have 1,000 here. Okay. You add it breaks resistance here. You add another 1,000. It breaks resistance here. You add another 1,000. Let's say you get lucky and it breaks another resistance here. All right. You add another 1,000. So you $1,000, $2,000, $3,000, $4,000 in the trade. And you're waiting. You're just waiting. You sit in duck, right? So you're just waiting, right? For the price to pull back. And that's okay. We can do that. All right. But there's another school of thought. We can do this, but there's another way to do this. So we can scale up. And there are times when scaling up might work well. All right. And scaling out might work well. All right. So we have to be flexible and look at each opportunity. All right. So rather than being 4K, scaling 1, 2, 3, 4, and now you have 4K at risk and you're up here. You're high up here. You're not down here anymore. And you're $4,000 in all the way up here. And you haven't taken any profits. We've added risk. Every time we do this, we add in risk. We put in more risk into the market. Another way to think about it is this. Hey, I'm going to take that 4K here. All right. And I'm going to put it on this trade here. I feel good about it. And guess what? If it goes against me, I'll take a loss. I might lose a 1K here. I might take a 1K here loss. All right. But let's say it goes up here. All right. And now I'm up. I went up 1K. So I went from 4K to 5K. All right. I'm going to take that 1K off the table right here. I'm going to still leave my 4K. Okay. Now, let's say it moves up again, up here, and I got another 1K. I'm going to take that 1K off the table. I still have my 4K. So I took profits here. I took profits here. I'm only risking 1K. All right. And then I got one more chance, right? It moved up here. I still have my original 4K. And guess what? It went up here. I made another 1K on this leg. I'm going to take profit. So now I have my original 4K, but now I've taken profits on 3K. That makes sense?
Brilliant.
Yeah, this is gold. Thank you so much.
This is really good.
Yeah, this is gold. Yeah.
Yeah, and every trader has to kind of know which one works best for them to either scale up or scale out. Everybody kind of have to have that in their game plan moving into the trade. So sometimes it works and sometimes it don't. So definitely good stuff, David.
Yeah. And for small traders, scaling small traders, meaning small capital, scaling up works great. All right. So if you have a smaller account, all right, no, you have to protect, but we can use when we're scaling up, right? When we're scaling up, we can use the broker's capital. All right. But we have to be solid, right? We on all of this, we have to be solid, right? But we can take a small account, build to a pretty decent size account by scaling up. Scaling out is more, it's more of a, you've solid, right? You've got good capital, you've got good protection, right? And you're not greedy, right? You're basically protecting you want to protect what you have. So initially you're going to put a little more capital at risk, but you understand, right, the psychology of the markets, that as the price moves higher, you're going to have new buyers, right, pushing the price higher, all right, where you're going to break new resistance levels to get out, because you understand at some area, at an area up in this area in here, sellers are looking to now push your price lower, right? And that price will eventually, right? Oh, it's a good chance that it might come down. So understand what's happening here. Guess what? Right? The trader that is scaling out understands this very well, understands this extremely well. All right. So when we have short sellers that come in, right? When we have short sellers that come in, they love the fact that the retail traders are jumping in here, because they can now come here and short and push the price back down. These traders here that are scaled up, right? Up is at risk. The traders that are scaling out understand, they're playing more defense, and they understand what's up here at the horizon.
Wow.
All right.
Whenever you scale up, you kind of hope for a good support and resistance to be formed, because you kind of get more protection as the price goes up, because you have more capital at risk. So you kind of want those support and resistance to indicate where you are in the trade, so that you can stay protected, because you're scaling up. You got more capital at risk. So those small consolidations are not always bad, especially when you got more capital, because you need to have a price point to indicate where you are and how safe you are. So that's that. And then if you don't get it, and all of a sudden some crazy news happen, and you have to fall back to the most previous support and resistance for that exit, that can look really bad on you when you got the most capital up there like that. It can really look really bad on you.
Yes. The goal, I would say the goal, the goal for every trader, okay, is to do this, because this is what the hedge funds do. Right now, we if you guys read Trend Following, okay, they will scale, you know, Trend Following, the name says it all, right? Trend following. So we follow the trend. So as the trend keeps going higher, we just stay with the trend and we keep adding. All right. So we can do both. I'm not saying one is better than the other. All right. But there's we can do absolutely what's nice is if we catch a really good trend like this, something like this, right? And we keep adding to that position, we could take what could have been a 1K position, all right? And we keep adding, right? We could turn that to a 10K position, right? Down here. All right. But there are disadvantages and advantages to both. I would practice both. So you don't have to have a large amount of capital. So you could do this with, let's say, for instance, right? Let's say it's Forex and you know what you're doing a bit, right? And you put $500 here, right? Just try with $500. All right. And then as it breaks resistance, right? Price moves higher as it breaks resistance, right? Let's say you have, 5 lots, whatever, right? You take a lot off the table. It moves up, take another lot off the table. It's hard to do. It's hard to do because we want it to just keep going up but taking that profit, right? Taking that profit is really good. It just, when we're constantly taking profits rather than adding on risk, trading becomes a lot of fun. Yeah. When we're constantly taking profits, even if it's a small amount of profits, right? Rather than adding on risk, right? Every time we add risk, that adds to our emotions because it's more money, right? It's more of our capital that we're putting out there. All right. So you could practice both, start small, right? Practice both, start small, right? And Gerald is right. There are times when you're going to pull out, you're going to pull it out, right? You're going to say, okay, I see a trade here. I love it. I see where buyers could come in heavy, right? Start to think, okay, when they come in heavy, I'm going to get out. I'm going to take some profits here. Okay. It's a little different thought process. But now you're always playing defense, but boy, now when you're constantly taking profits, and then when you get high up in here and you're not risking, you're not risking 4K, you're risking 1K, right? You've reduced your size by, let's say, 90%, and you've banked profits. You've been banking profits all down here. It's a totally different game. Totally different game.
Yeah.
Totally different game. Yeah, totally different game.
Okay.
All right. All right, guys.
Thanks.
Hey, David.
Thank you, David. Really.
Yeah. Hey, Carlos.
Great class.
David.
Yes.
Is the real quick question, is the market going to close tomorrow?
I think I haven't looked, but normally I think on Thanksgiving, I think it's half day. I think it's half day tomorrow. So I think it'll close by noon, 1 o'clock. Okay. We will not have a class tomorrow. All right. So I don't mind. We went over a bit. But this is good information. So I will see you guys on Sunday. The mic, I got a new mic. So you guys are hearing me better?
Much.
Yeah, this is much
better.
Okay,
Much.
very good. You guys don't know what I had to do to get this new mic. So I will see you guys on Sunday. Happy Thanksgiving, everyone. Happy Thanksgiving.
Glad you
Happy
Indeed,
Thanksgiving,
and
everyone.
today it was a good call.
All
Good
right.
discussion. Thank you so
Great.
much for staying over. Thank you.
All
Good night.
right, guys. Take care. See you guys
Bye-bye.
on Sunday. Bye-bye.